When an unexpected emergency arises, like a sudden car repair, a medical bill, or a gap between paychecks, it is easy to feel overwhelmed. For millions of people, traditional banks offer very little help because of low FICO credit scores or lack of traditional credit history. The fear of being rejected or, worse, falling into a predatory payday loan trap with hidden fees and impossible payoff dates can cause tremendous anxiety. You might be asking yourself, how can I access quick funds without destroying my credit or dealing with hard credit checks? Is there a way to qualify based on my actual income rather than an arbitrary score? This is where understanding how to properly fill out a possible finance loan application becomes critical. Possible Finance operates differently from traditional lenders. Instead of pulling your FICO score, they evaluate your financial health based on your real-world banking activity, direct deposit history, and cash flow. However, because the application process is automated by algorithms, small mistakes during the application can lead to unexpected denials. By taking the right steps, preparing your information ahead of time, and understanding what the system evaluates, you can significantly increase your chances of approval. To begin the application process, you must download the official Possible Finance app on your iOS or Android device or visit their official platform. Before hitting start, make sure you have a few essential items ready. A valid U.S. mobile phone number capable of receiving text verification codes, your full legal name, date of birth, home address, not a P.O. box, and your social security number. Ensure that the name you enter on the application matches the exact name listed on your government-issued photo identification, such as a driver's license or state ID. Discrepancies between your registered name and ID are one of the most common reasons applications get delayed or flagged for manual identity verification. The core step of the Possible Finance application is linking your primary checking account. Possible uses a secure partner called Plaid to review your financial activity without needing a traditional credit pull. When choosing which bank account to link, select the account where you receive your regular paycheck direct deposits. The underlying algorithm looks for at least 3 months of consistent transaction history, regular payroll deposits totaling at least $750 a month, and a positive account balance at the time of application. A common fear applicants have is whether linking their bank account will give the lender permission to drain their funds or trigger overdraft fees. In reality, this link allows the algorithm to analyze cash flow patterns to determine a safe loan amount that you can realistically afford to repay in installment schedules rather than a lump sum. To maximize your application's success, pay close attention to your bank balance on the day you submit your application. If your account currently has a negative balance or frequent recent insufficient funds fees, consider waiting a few days until your direct deposit clears before submitting. Applying while your balance is positive signals financial stability to the algorithm. Additionally, ensure you do not have multiple active loans from other short-term lending apps active at the exact same moment, as heavy debt stacking can raise red flags regarding your ability to manage additional payments. If the application requests a photo of your ID, place your state ID or driver's license flat on a well-lit surface with no glare or shadows, making sure all 4 corners of the card are clearly visible within the camera frame. Avoid using expired identification or covering any text with your fingers. Once your identity is verified and your bank data is processed, the system will present your pre-approved loan amount and repayment terms. Before finalizing, review the Truth in Lending Act disclosure presented in the app. This document clearly lays out your total repayment amount, annual percentage rate, and scheduled installment dates, usually spread out over 4 installments across several weeks. Possible Finance offers a 29-day payment rescheduling grace period in the app without charging rescheduling fees, providing a safety net if your cash flow fluctuates. Once you review and accept the loan terms, select your preferred disbursement method. If you link an eligible debit card tied to your primary checking account, funds can land in your account almost instantly, often within minutes. If you choose standard ACH bank transfer, funds typically arrive within 1 to 2 business days. By preparing your direct deposit history, ensuring a positive checking balance, matching your legal identity documents, and selecting the right payout method, you can navigate the Possible Finance application smoothly, secure the funds you need, and start building positive credit history with on-time installment payments.